Hey guys, this is Mark Shawson, the Pattern Trader here, and we're finishing off another extraordinary week where in the last couple of weeks, the British pound versus the New Zealand dollar has rocketed almost 1,000 pips from a level of about 191 starting a couple of weeks ago, and it went over 2,000 today. Now, as you guys know, and most of my members know, this has come as no shock to me. I have been alerting our members since the beginning of August to a massive turn in the British pound versus New Zealand dollar, where I identified a double bottom pattern around the 183, 184 level in early August. And at that time, started sending out emails to start loading up and accumulating positions on the long side of pound versus New Zealand dollar. And even though we've had this extraordinary move from 183 to over 2,000 over the last couple of weeks, I think that this move is far from over. I think we're going to see this pair soar a lot higher. Now, how was I able to handicap this move? Actually, as early as late 2016 and early 2017, I started to shout from the rooftops to anybody who would listen to me that the pound New Zealand dollar was going to begin a massive turn from what was then a huge downtrend. And then I identified several bottoming price patterns and combined that with the price action around the 167 to 175 price level. And I said this was it. This pair was going to climb higher over time. And over the last couple of years with fits and starts, this is what we've seen. And we have capitalized on some extraordinary moves. Full disclosure, since August, in a combination of positions, my trading accounts have gone up over $800,000 just in the pound New Zealand dollar. Now, I teach people on my webinars, on my boot camps, how to identify these extraordinary moves. And it kind of always amuses me when I sit on these boot camps and I go through my methodology on how I seek to identify and capitalize on these monster moves by looking at the bigger time frames. I always inevitably get the question, well, can I, do this on a smaller time frame? And I think behind that, what they're saying, dude, look, I want to trade more. I just don't have the patience to wait for a weekly bar to close or a daily bar to close. I want some action. Can't, I take what you're telling me and kind of apply it in a smaller time frame. And, my answer always is that, if you're looking at these moves on a 5 or 15-minute chart or even on an hourly chart, you cannot see the setup that is going to translate into a 1,000 pip move as we've seen over the last couple of weeks in the pound versus New Zealand dollar. In addition to which, you're going to see a lot of setups which look like something, and under a weekly bar chart or a daily bar chart or a monthly bar chart, to my mind, would look like something. But when you're looking at something on a 5-minute chart or a 15-minute chart, and what looks like a double bottom pattern or a double top pattern, that should translate into a move. It just comes back in your face, and it does not work. So I have a certain way of looking at it. I look at the long-term charts, a combination of the monthly, the daily, and the weekly. And I do that because it allows me to see the forest for the trees. It allows me to see the setups that are going to produce a 1,000 pip move in 2 weeks. I simply cannot see that on a short-term chart. And now I'm going to, show you what I saw was looking like an enormous setup on a 5-minute chart in the pound New Zealand dollar. In fact, I'll be honest with you, I was long pound New Zealand. I had a bunch of positions, and then I knew I wanted to do this video, so I kind of, switched my charts to a 5-minute time frame. And then I left the room, and then when I came back, I saw this huge bear price pattern forming on this 5-minute chart. And I thought, maybe I need to get out of my positions. Maybe I need to hedge my positions. And then I remembered it's just a 5-minute chart. And I'm going to show you what looks like a, classic double top, head and shoulders bear pattern on a 5-minute chart. If I'd saw that on a weekly or a daily, I would have taken action. But I knew it was just a 5-minute chart within the cadence of a longer term bull trend. And that's the thing. When you see the long-term charts, you understand that when you get these hiccups, that is just within the cadence of the move. So with that said, I'm going to go and show you quickly what I mean by looking at a short-term chart and how it can be very deceptive to your trading, and also hook you out of what can be a great move. So you would have gotten out or you would have gotten short and you would have missed a huge 300 pip move in the pound New Zealand, which I obviously stayed in and made several $100,000 since that little 5-minute chart indicated I should go the other way. In this video, I'm going to explain how I capitalize on monster moves in the market using analysis based on long-term price charts. In this particular price chart, I'm looking at the weekly chart of the British pound versus New Zealand dollar. Now, this is a weekly chart wherein each one of these price bars represents 1 week in time. Now, I'm going to contrast this analysis with short-term trading. Why short-term trading doesn't work and how you can really explode your gains by using longer-term time frames in your analysis. In this particular chart, at this juncture in late 2016 and early 2017, I started to alert our members to an enormous opportunity where I thought that the pound versus New Zealand dollar was going to reverse the monster downtrend that it had been in for a couple of years by virtue of some very prominent price patterns on the chart, which I've drawn for you. We see an initial double bottom right here, and then it came back and retested the same area and put on another bottom. So you have a very prominent double bottom on the weekly. This looks just like a W bottom, which looks like the letter W. So it comes down, makes an initial low, bounces off, retests the low, and when it breaks this neckline, which is simply a line drawn through the entire pattern, this confirms this bottoming price action. And with the word bottom in there, to my mind, this represented a long-term bottom in the pound versus New Zealand dollar. Now, I realize it would be easy for me to go back and gerrymander what I would have done or what I should have done on a long-term chart and hoodwink you that way. But let me show you a couple of emails where I was starting to scream from the foothills about the virtues of going long the pound versus New Zealand dollar. This is an email that was sent to thousands of our members on March 13, 2017, several years ago in the pound versus New Zealand dollar, where I was advocating buying or going long the pound New Zealand dollar around the 176 price level based on a long-term double bottom both on the daily and the weekly price levels at the 167. Then I talked about the key reversal price action in this email. This is an email that went out March 5th, 2017, where I was looking at the pound versus New Zealand dollar on the weekly charts and advising our members to buy it at 175.09 based on the long-term double bottom and the key reversals that were intact at that time. At that time, I said I believe that prices can only head much higher from current levels. Remember, that was at 175. Today we crossed the 2,000 level in the pound versus New Zealand dollar. This was an account that was sent out on April 2nd, 2017, just 1 month after the initial buy order at 175.00 went out to our members. Now in this case, pound versus New Zealand dollar was trading about 400 pips higher. So instead of booking the profits with a 400 pip gain in the account, I advised our members to add to their positions at 179.31 on April 2017. Following those two emails where I advised to buy pound versus New Zealand dollar 175.09 and then 179.31, pound versus New Zealand dollar exploded to a price level of 189, and me and our members booked a profit of over 2,500 pips on that explosive move. Following the observation of the double bottom on the long-term weekly price charts, I've always been on alert for the pound versus New Zealand dollar positioning itself to go higher. In a recent time frame, I saw that the pound versus New Zealand dollar had double bottomed at the 180 price level. In addition to the double bottom, each time it bottomed, it made a new low and closed at the high of the week. I call this a key reversal. Now, in the more recent time, I started alerting our members to a turn in the pound versus New Zealand dollar that was going to go considerably higher. This is an email that was sent out to our members just about a month ago, where the pound versus New Zealand dollar had put on a double bottom price pattern, and I was advising our members to start piling in at around the 186.72 area based on the double bottom price pattern along with the key reversal. At that time, the pound versus New Zealand dollar was trading around 186.72. As of this recording, just 1 month later, the pound versus New Zealand dollar is 1,300 pips higher than where this email went out. As you can see, I have not hidden my enthusiasm for the pound New Zealand dollar. Shortly after the buy signal at 186.72 went out, I sent out another email on the 19th of August alerting our members to add to their positions at 189.57. Remember, the pound went over 2,000 today and is trading at fully 1,000 pips above where this buy signal went out. In this email, just a few days later, after acquiring positions at 186.72 and 189.57, the market was trading around the 193 area. And instead of bailing out of those positions, I was advising our members to buy anywhere. Buy on dips, buy on breakouts, buy wherever you can in the pound versus New Zealand dollar. Even though it had soared 1,000 pips off its bottom, I knew it had significant potential based on examination of the long-term charts. And again, we're trading about 700 pips above where this email went out. I'm showing you a graphic of my own trading account, not to rub salt in the wound, but to demonstrate how I identify and capitalize monster moves in the market. Now you can see that I started acquiring positions in pound versus New Zealand. I actually made a lot more on the run-up between 183 and 192. After I dumped out of those, I started reacquiring them. And as you can see, I've got over $600,000 in open profits in the pound versus New Zealand dollar. Now you can see I acquired these positions several weeks ago, and I'm still in these positions. Now you'll also notice that there's no stop loss or take profit. I don't advocate that, but I knew that this was going to be a bucking bronco. I didn't want to get prematurely hooked out of it. Truth be told, after I acquired some of these positions at 193 and 192 and a half, they went under 190, and I was facing some significant losses, but based on the underlying patterns, I knew the market would ultimately bail me out, and here you see that I'm actually in front over $600,000. Now I show you this to show you the merits and advantages of trading based on long-term charts, based on the daily, the weekly, and the monthly. Now, as I said, very often when I go through my analysis, I'm always amused when I get the question, can I do this on a shorter time frame? And now I'm going to show you the folly of trying to trade in and out or try to trade based on the patterns you see in short-term time frames. Now to demonstrate and contrast the difference between trading and looking at patterns based on long-term charts, daily, weekly, or monthly with shorter-term time frames, I'm now looking at a chart of the British pound versus New Zealand dollar on a 5-minute chart. And as you can see on this particular chart, this has formed a classic double top at about the 198 area, in addition to these two shoulders, a classic head and shoulders. Now all combined, these would suggest very bearish price patterns. If I saw this pattern on the monthly, the weekly, or the daily, believe me, I would be starting to load up on the short side. But this is the deception of trading on shorter term time frames where you cannot see the forest for the trees. Now this pattern, once it broke its neckline, which is simply a line drawn to the entire pattern, should have basically broken hell to the downside. Instead, this is what happened. Now I'm showing you a chart that I captured just a few minutes after the pound versus New Zealand dollar broke its neckline after forming this double top head and shoulders price pattern, which has suggested that it was going to go a million miles the other way. Now, if you were looking at this and you took it, you got some brief satisfaction where it went 20 pips in your favor, but before you could look up, it was already in your face and making new highs in the pound New Zealand dollar. So A, you got hooked into a deceptive trade, and you missed out on an enormous uptrend based on what the long-term charts were telling you. So this is the folly and mistake of trading on short-term price patterns combined with price action that is very misleading. And again, most people are doing this, and the question you have to ask yourself is, why are 95% of traders losing their money if everybody's trading on short-term time frames using some kind of indicators for their analysis? Because they're not seeing the forest for the trees. They're not seeing the bigger moves. So I hope you got a ton of value out of this little analysis and this little chat. If you like the way I look at the markets and want to understand a little bit more about my trading methodology, then feel free to download a free copy of my 21 Power Strategies. So until next time, I wish you a healthy and prosperous trading day.